So what does it mean when you apply your refund to your next year's estimated taxes? My name is Tony Cameron with TLDR Accounting, and we provide tax and accounting services to therapists and small business owners in private practice. So you file your taxes. It says you're getting back a refund of, say, $3,000. And then we ask, do you want us to apply that to your Q1 payment, or do you want the refund? Most folks would be like, I want the cash in my bank. I suggest that you take a moment to pause and see if it does make sense to apply that payment. So when you're a small business owner or freelancer, you have a side hustle, 9 times out of 10, you have to make estimated tax payments each quarter. So that means each quarter, 4/15, 6/15, 9/15, and 1/15, you're making a payment to the IRS based on what you think the taxes are going to be that you owe for that quarter. Now, your tax return's done, say, it's in early April, and you're going to owe a payment in a week anyway, you can just apply your refund to that estimated tax payment, and then you don't need to worry about it, or maybe it reduces your payment. A lot of times I recommend clients roll over their refund if they are a small business owner, since then that's less money that they have to pay in for their next estimated tax payment. Now, a lot of folks are like, well, I get a refund every year. I'll just take the refund. And that's completely fine, right? It really depends on your own situation. But it is an option if you're getting a refund. Either you can take it or you can apply some of that to the next year. Now, some folks are like, well, why would I want to do that? Well, if you're going to be making the estimated tax payment anyway, instead of having to log on to the IRS's website, make your payment, get your confirmation code, you can just roll it over, right? In addition, say you're late making a payment, say you file your taxes in June, you didn't make your Q1 payment and you apply it, then that would be applied based on your Q1 payment, because it'll be an overpayment and it'll be applied. So it gives you a little bit more flexibility if, say, you hadn't paid in quite enough as you needed to, or you didn't make that payment in April, right? It gives you a little bit of flexibility, which is really good, right? Some folks are like, well, in what cases would I take the refund anyway, right? Some folks, maybe you have some credit card debt you want to pay down and this will pay it off, take the refund. Maybe your business has some short-term cash flow needs and you need to take it out, go for it. The big thing is I wouldn't take it out if you're already behind on your estimated tax payments for the next year. So the biggest thing is if you haven't made your estimated tax payments because you're behind, just apply your refund over, right? Because you're going to owe the money to them anyway, and it's just better to apply it. That way you'll owe them less when your next tax return comes up, right? But overall, we highly recommend that you make your estimated tax payments. If you have a refund, applying it to the next year is great. The one thing that you should be doing no matter what, if you're a small business owner or a freelancer, is having that tax savings account, setting aside 25 to 30% of your income into that account each month so that you can make your estimated tax payments on time, right? That way you're good to go, you don't owe the IRS any money, and everything's fine, right? So that's what it means when you apply your refund, say from 2020 to 2021. You're just applying it towards your estimated tax payments for the next year. Hopefully you found this helpful. Subscribe below.